Hello everyone and welcome to Day Trader S&P 500. Today is Sunday, August 29. This is Dale Woodson, editor of Woodson Wave Report. You can see our subscription services there. I want to alert you guys the YouTube 10% discount ends in a couple days. Okay, we also have a contest. Guess the closing price of the S&P at the end of the month. Get a free 30-day subscription to everything we offer. You'll be guessing the end of September now because it's past the 15th. You can see all of the services that we have to offer there. Also, I'll let you guys know about our disclaimer and our awards over the years. Okay, we have a very important day coming up tomorrow, August 30th. I'm going to get right into our little thank you guys for subscribing. Remember to hit the reminder bell and the like button at the bottom. And of course, it didn't show up, but the like button looks something like that, only on a much smaller scale. We appreciate all the patronage to the channel. Okay, I want to get right into the S&P. Now, this chart is a little bit old, like a week old, but it still applies. Okay, you can see we have a time spiral here going from the March 4 low. Remember, that's the first time I ever started a spiral from the low. I always started from a high looking for the 55-day low. But this one I started from the low. It's just had the most unbelievable accuracy. Through the 26th, it was 99.99999% accurate. From March 4 into 7/26. The next turn date is October 23. I started this spiral from the July 6 high. We had an expanded flat there. We may have had an expanded flat within an expanded flat. We'll save that for a later date. It could even be at 3 degrees, one ending here on the 8th, one ending on the 19th, and one ending on the expected next low. Okay, the next turn date in this sequence is August 30th, and that's why this week-old chart still applies. We're looking for an all-time high on August 30th ever since, well, for a while now, and it's still in play. That, of course, is tomorrow. It'd be nice if it hit right on our target, right on our turn date. That would mark a high. Not coincidentally, 55 days after that high is October 24. Okay, that should mark a low if 8:30 marks the high. 55 days later, it's on a Sunday, so we're looking at a weekend. Go back to the March 4 Fibonacci turn date sequence, and you can see the next date in that sequence is October 23. That's the weekend. So we're looking for a possible, no guarantee of course, possible panic spike low either on Friday the 22nd of October or Monday the 25th. A lot has happened before then. We've got to see this market top on or near August 30th and then move down. Then we'll watch that internal wave count. So a couple big ifs, but in my fantasy world, if you will, in perfect arithmetic or Fibonacci sequence time spiral world, the market tops on August 30th and makes a low on the weekend of the 24th, 25th, on Friday the 22nd or Monday the 25th. So that's still in play. Tomorrow's a big day. We'll see if we get a new all-time high. If we can make our wishes, then I wouldn't mind seeing a key reversal day on Monday. But that's getting way ahead of ourselves. We'll see what happens on Monday, okay? Another thing we're going to do is we're going to move our make or break off of the July 19th low, and it's not pictured here, I'll get into that, into the August 19th low with the move to new all-time highs. Let's get into that here on the S&P. We're looking at an hourly chart, and there's the July 19 low. You can see a 1 up, a 2 down, a 3 up, a 4 down. Let's make that bigger for you guys, okay? And a 5 up, complete or nearly so. What's interesting, watch the dotted line here on the 1 high. You can see the 4 low over here, held just above the 1 high over here. Okay, perfect Elliott Wave formation right there. It didn't break it, and then we're looking for 5 waves up from there. Okay, and you can see we've got a 1, 2, 3, 4, and 5 is complete or nearly so. I think let's get an extension on here. If 5 gains equality with 1, see if I can get that on there. Where will that target be? Of course, we passed it, didn't we? I want to break that down from the August 19th. That's going to be our new make or break. You guys can put stops there if you want. I call them make or breaks. Okay, 1, 2, 3, 4, 5. Let's get this going here. Fibonacci extension. I may break that down into, let me break that down into something smaller. Okay, let's go to a 10-minute. Let's go here. Let's get that 819 low. There we go. This is better, much better. Okay, now we can get that 5-wave advance, even make it bigger and better. Okay, and let's get that from the August 19 low. Let's see where 5 equals 1 there. This should be pretty tight. Yeah, about 45.18. I think it's actually 19. I don't have that quite on the low. Yeah, 45.19. We're looking for wave 5. Okay, that should happen Monday. 1, 2, 3, 4, 5, 6, 7. Yeah, 8 and 9. All right, so that's the turn date coming up, looming ahead. Again, quick review. We're looking for these spirals to hit. Okay, well, oh, by the way, can this 830 mark a high? Yes. Can 1023 mark a high? Yes. We've got to see these things develop. We got to see this mark a high and then reverse, and that's where we got our make or breaks. Okay, 819, then 719 lows, and let's get that 819 low for you guys. That is, what is that low there? 44. Low, 68.99, 44.69, right around 44.69, and a subsequent break of this August 19 low, which is, what was that here? 44. Let me get on it here. Bear with me. It's tight. It should be right there. 43.67. Okay, so we want to see second waves cannot retrace more than 100% of the first wave. So this is 1, 2. Let me mark it. All right, let me get in here. And okay, so if we get a 1 up, a 2 down, 3 up, a 4 down, and we already have 5 up there. Let's make that a smaller degree of trend. There we go, minuscule. Okay, so if that is a 1 and it's ongoing, then 2 down cannot go below this low, which we just stated, which was 43.67. Okay, that'll signify a change in trend. That's why we're moving it to that August 19 low. Okay, we're going to look at a few things today. Russell, Tesla. We're going to look at the dollar and the US 10-year and gold. So let's move right along. On the Russell 2000, we're looking at a daily chart from the March 2020 lows. You can see a 1 up, a 2 down, 3 up, a 4 down, and a 5 up. We've got a lot of sideways that at first glance looks like a 4, and it could be a 4. This could be a 3 extended, but we got to look at this a little closer here. You can see the all-time high in the Russell was 23.60, I believe, on 3/16. I think it's right there. Yep, 23.60. And then we've got a down, up, and another down, and another up. Okay, these highs have not gone above that March 16 high of 23.60. So this looks like a 4. It could be a series of 1s and 2s. We have a 1 down, a 2 up, and another 1 down and 2 up. Okay, so I'm going to look at that a little closer. Let's get into an hourly chart. Okay, and let's look at that high. Let's bring this down. Bear with me while I bring that into focus. There we go. Let's look at this a lot closer than that. Look at these waves. Okay. You can see we could, this could be, let me make sure I got that in there. Yeah, that's into June. There we go. Now we're talking. This could be a 1 and a 2 and another 1 and a 2. Okay. This 2, again, didn't, you can see that March 16th high. This 2, if it's an A, B, C up, let me mark that for you guys. Okay, let's call that A, B, C from here. An A up, a B down, and a C up into here. Okay, that could still be a 1 down a 2 up, and this one breaks down pretty good into 5 waves and a 2 up, another A, B, C. Let's see what this Fibonacci retracement is. Obviously the other one's way over 786. It's like 99%, somewhere around there. And you can see this is hanging right at the 618. Let's see if the 768 is nearby. Let's add that in. 786, there we go. There it is, just above it, 9170. So this is hanging around near the 618. You see us hit it several times. Obviously, this high has to hold here, and obviously the high at 2360 needs to hold. Okay, so that's the internal breakdown. Looks like a series of 1s and 2s. If not, it's a big sideways 4. If not, the make or break is the March 16th high of 2360. A move above that makes this sideways 4 and makes that high a 3, and we'll get a higher high in 5. We'll watch that play out. We'll watch that on Monday. Otherwise, a series of 1s and 2s break below this low here, which is the July 19th low of 2107. That'll confirm the bearish count with a series of 1s and 2s. So we have our make or break to the upside. We have our make or break to the downside. We'll let it play out and see what it tells us it's doing. Our always look at Tesla. Again, 5 waves down from the January 900 high. An A, intermediate wave A. An A, B, C up for intermediate wave B. And then we're looking for C down. C down gains equality with A at 368. Okay, we'll need to see a break of some key support levels and make or break levels. There is a chance someone asked, could this be this move up here? 1, 2, 3, 4, 5. I said it couldn't be a 4 because this 4 breaks below what would be that 1. It could be a leading diagonal. We'll have our key make or break points in here to either negate that or validate that count. Obviously, we need to move above that high, but let's look at it a little closer here. Get out of this daily, and let's look at a 10-minute, okay? And here is that intermediate B wave high. We saw a clear 5 waves down, which gave us a confirmation that that is a B wave high. We're starting wave C, and this is one of C. Okay, and then we've got an A, B, C 3 wave up, and another 1, 2, 3, 4, 5, and that 4 holds just below that 1. So we have the beginnings of wave 3 right here. We would need to see, or at least the bears would need to see this wave 1 high right at 716. You can see it there, hold, and a subsequent break of this first wave low, which is, I believe it's right under 700, 698, 697, right in there. I think it's 697.99, okay? So this high here holds at 716. This low breaks here at 697, and we're off to the races to the downside, okay? The bulls would need to see, obviously, a break of the high here at 716, and then a subsequent break of the high back here on August 13 of 729.87, basically over 730. Okay, so we can get even a little tighter here. Within wave C, we have a 1 down and a 2 up, sitting, by the way, right on the 768 retracement. You can see that red line right there. Okay, that marks 2, and then we can look for a 3rd wave down. Should be, 3rd waves are strong and powerful, so it should accelerate to the downside from the intermediate B wave high. We can count that as wave 1 down. Let me get it there. The 2 up here. So within wave 3, we've got 636. You can see it right there. 636 and then a 1618 takes us all the way down to 585. That's what we're looking at for the bear market targets. The bulls need break of these highs here on August 25 and the one on August 13. We haven't looked at this in a while. We're going to look at the US dollar, DXY. You can see from the March 2008 lows, this is a weekly log chart of the US dollar. You can see a 1 up, 2 down, 3 up, 4 down, and a 5 up, and it looks like we're tracing out an ABC correction to the downside. Let me get those Fibonacci retracement targets. This is weekly, so I want to get as close as possible to the actual highs. You can see the B wave didn't quite get to the all-time high or in this wave count back in December of 16. I think that's December right there. Okay, you can see an A down, a B up, and a C down. This is a 382 retracement right here where A and C hit right around 89.59. And let's look at that C wave in relation to A. Okay, let's see what we can get for targets here. If we can get an extension from that fifth wave high down to the A low, there is the B up, and you can see we have a target of, I think I had it written down here, of 87.24. Yeah, there's 25, and C gains a 1618 down here at 77.54. Okay, so if we're looking at C wave gaining equality with A, we're looking at 87, which is 87.25, which is right in between the 382 at 89 and the 500 at 85. Otherwise, we got a 1618, which is all the way down here at the 786. Okay, so that's what we're looking at near term in the DXY. Let's look at the US10-year. You can see here we're looking at a daily chart, the March 20 lows into the 39-year bear market in rates. You can see the reversal there showing a change of trend. That's 1 up, 2 down, 3 has subdivided or extended into 1, 2, 3, and here we are in 4. 4 low cannot go below the wave 1 high. You're sitting right at there at the 618 at 0.9888. Okay, you can see we've got an ABC down here. Okay, right on the 50% retracement, right at, let me just see if I can get on that there. That should be a low of 1.27. Okay, the 6.8 retracement is just above the wave 1 high at 0.9888. Okay, so if this is going to go further, it should hold. Let me get that exact number here for you guys, if I can get on it. 0.9860. 4 cannot go below that. Okay, but it looks like we have 5 waves to the upside in the US 10-year to signify a change in trend. Let me look at that a little closer here. Get into the hourly. Okay, give me a second here, or pull this up. There's that 4 low. Let's expand that out. There we go. You can see here we've got a 1, 2, 3, 4, 5 waves up, and a decline here into the 618 at 1.22, and another 5 waves developing to the upside on the hourly chart off of that C wave low on August, was it 4 or 5? I think it's August 4, a low of 1.146. Okay, 5 to the upside, a retracement, and here we go. By the way, this could be an A down, a B up, and then a C down to touch that double low right at 122. We'll watch that. A break above this 5th wave high, which is sitting right around 1.37, would signify that the correction's over and we're going higher and higher. Okay, otherwise we can look for the double bottom or the C wave in the A down, B up, and C down scenario. Long story short, or the bigger trend is to the upside. Surprises should come to the upside, unless we see a breakdown here to the 618. Sorry for repeating myself, but I want to always make sure I give you guys the bear market make or breaks and the bull market make or breaks. Okay, this has to hold for the bears, and this has to break. I'm sorry, this has to hold for the bulls. This low here right at 1.22, and this has to break right at 1.37 for the bulls. Bears need to see a break of this low at 1.22 and a subsequent break all the way down below the C wave low. Okay, let me get I want to go back because I think I had let me look at that daily chart one more time here. I'll have to expand that in. Yeah, that 4 can't go below that 1, so that's another make or break point. That 1 high at 0.9860. All right, that 4 has to hold below there. Let's look at gold. Gold on a daily chart. Back here in August was the all-time high. Again, this never did look impulsive. This ABC looks corrective. That doesn't look like the change in trend. We had 5 waves to the upside. We had a vicious wave 2 that held just above the beginning of wave 1, so 2 cannot retrace more than 100%. I think it did about a 99%er on it, and then it started moving to the upside. And this break right here, and this is a daily chart, was a good key above that wave 3 high, or above that most recent high. We're going to look at this a little more closely too. This is a daily chart. Let's go to an hourly chart and look at this move up from that second wave low. There it is there. Let me expand that out, move that up. There we go. And you can see that I got that one sitting on top of there. I want to move it. There we go. I'm sorry, it's off a little bit. It's there. There we go. We got a 1, 2, 3, nice long and sideways 4. There's our 5 target. I'm sorry, there's our 3. Yeah, 3 gained equality with 1. 5 we can have at 1833. We can get a little more specific with that. We could move this to the wave 4 low. Might be a little different. I'll put it over here. I think that's it there. And then we have, 5 sitting on 1847. Okay, so that's what gold looks like. That was a scary wave 2 low there, but it did hold. And quick little recap here. What are we looking for? We're looking for a high on Monday, August 30th, and then look for a change in trend. Okay, well, let's see how it plays out Monday and the rest of the week. And until next time, take care, everyone.